That's music to our ears because, and we do believe more and more companies are going to start behaving in this way instead of catering to short-term time horizons and we would say in some cases short-sighted shareholders who are much more interested in profits now, dividends now, share repurchases now, than they are in a company investing aggressively, foregoing short-term profitability in order to really catch some very big waves out there.
Investment, growth, and strategy. Today, the spotlight is on Cathie Wood and Ark Investment Management, known for their bold investment strategies in the ever-evolving market. Recent data reveals Ark's active involvement with purchases and sales within its portfolio, showcasing its adaptability to market trends. Despite fluctuations, Ark's steadfast support for Palantir Technologies stands out, reflecting a consistent belief in the company's potential. How will Ark's continued investment in Palantir shape the future of both entities?
Let me ask you about Palantir, which we just found out you've added to. Can you tell our viewers why you added rather significantly to your stake in Palantir?
Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the CEO. He was speaking our language. He essentially said to investors, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here. So if you are short-term in your focus, you probably don't want to spend too much time investing in Palantir. So that's music to our ears because, and we do believe more and more companies are going to start behaving in this way instead of catering to short-term time horizons and we would say in some cases short-sighted shareholders who are much more interested in profits now, dividends now, share repurchases now, than they are in a company investing aggressively, foregoing short-term profitability in order to really catch some very big waves out there. So I'm astonished. Their revenues are still 61% government, but I've learned, and I think most people in the innovation space have learned over time, that some of the most important innovations in our lifetimes have started in the government, especially in the defense sector and in the intelligence sector. So we think in many ways, and they won't talk about how, but they're certainly garnering a lot of business, which tells us that they are seeing in the future and investing in the future in ways that companies, governments, but increasingly companies are going to need, especially as we're competing against China. I think we've been, again, with this short-term time horizon, we have not been spending enough in innovation. And so, Palantir's attitude is refreshing. It's exactly how we invest. We want our companies to invest aggressively. We don't want profits now. We want them to invest aggressively because we're moving into many winner-take-most markets. And the autonomous taxi world is a very good example of that. That is why our confidence in Tesla, going back to the largest position in our portfolio, is so high.
That video was released 2 years ago and is still very much relevant today. In it, Cathie Wood elaborates on why Ark Investment Management significantly increased its stake in Palantir Technologies despite the stock being down after the earnings report. She highlights Palantir CEO's message to investors, emphasizing the company's aggressive investment strategy to capitalize on exponential changes in the industry. Wood praises Palantir's long-term focus on innovation, particularly in government sectors like defense and intelligence, where crucial innovations often originate. She argues that in today's competitive landscape, companies need to prioritize long-term investment over short-term profitability to stay ahead, echoing Ark's investment philosophy. Earlier in 2023, Ark Investment Management had consistently added to its position in Palantir Technologies. Cathie Wood purchased shares of Palantir for the third consecutive day, buying 286,704 shares valued at $3.4 million. Palantir's flagship product, Palantir Gotham, tailored for intelligence agencies and governmental entities, has attracted criticism for its involvement in surveillance and immigration enforcement. Despite the controversies, Palantir's stock has been on a remarkable upward trajectory, surging 58% since May 5th, 82% year-to-date, and 46% over the past 12 months. It then held the 23rd spot in Wood's flagship Ark Innovation ETF, a position that has climbed since Wednesday. In addition to the Palantir purchase, Ark Innovation also made moves elsewhere. They sold 141,915 shares of Exact Sciences, valued at $11.5 million, and unloaded 25,557 shares of Shopify, valued at $1.6 million. Exact Sciences, known for its Cologuard colon cancer test, has seen significant gains in 2023, rising 68% year-to-date. Shopify stock then surged 30% by May 3rd, following announcements of business restructuring, despite layoffs and divestment from its logistics segment. Ark Innovation has declined 76% from its peak in February 2021, although it's rebounded 24% this year. Wood defends her approach, emphasizing a 5-year investment horizon, yet the fund's performance falls short of her goal of 15% annualized returns over 5-year periods. While Ark Innovation saw a net investment inflow of $28 million in the 5 days through May 18th, it faced a significant outflow of $444 million over the past year. Despite the challenges, Wood remains optimistic about the long-term prospects of her chosen investments, even as they face short-term volatility. Fast forward to today, Ark Investment Management's enthusiasm around artificial intelligence is still a driving force in the market, with the Magnificent Seven stocks notably contributing to the Nasdaq Composite's impressive 43% return in 2023. Among the beneficiaries of this AI revolution stands Palantir Technologies, which saw a staggering 160% surge in stock value last year. However, recent challenges, including a downgrade from Wall Street analysts like Brent Thill of Jefferies, have raised questions about Palantir's future prospects. Despite these concerns, Wood remains steadfast in supporting Palantir, doubling down on the stock and maintaining her conviction. Thill's downgrade reflects a broader skepticism among some analysts, who view Palantir as overly reliant on government contracts and question its potential for AI innovation. Yet, Palantir's recent initiatives, such as the launch of its artificial intelligence platform and immersive boot camps, signal a strategic shift towards broader market adoption beyond government sectors. Palantir's financial performance paints a mixed picture, with revenue growth from commercial customers outpacing that from government contracts. However, skeptics point to Palantir's modest revenue projection for 2023 and the challenges of achieving previous growth targets. Nonetheless, Palantir's efficient business model, profitability, and potential for future growth through AI innovation suggest long-term opportunities for investors.
Yeah, they've definitely cracked the code on how to translate their leadership in AI into the commercial business, starting with the US. They've started these AIP boot camps, which is an accelerated pilot to get some of their enterprise customers to figure out how to use AI in their current context with these new generative AI capabilities. And they've been able to do that very rapidly after producing a new product set about a year ago. They're now fully in stride in terms of getting enterprise customers to engage and adapt some of these products early.
What's amazing is that this just happened days before Palantir announced its fourth quarter earnings, and it's huge news. Palantir shares shot up over 19% in after-hours trading following the release of its earnings report, which surpassed analysts' expectations for revenue. Let's break down the numbers. Palantir's revenue for the fourth quarter of 2023 hit $608.4 million, up 20% year over year, exceeding the expected $602.4 million. Moreover, the company reported a net income of $93.4 million, or 4 cents per share, compared to $30.9 million, or 1 cent per share, in the same period the previous year. In a letter to shareholders, Palantir CEO Alex Karp expressed confidence in the company's growth trajectory, highlighting the expansion of its artificial intelligence platform. The demand for AI solutions, particularly large language models, has been relentless, driving Palantir's efforts to roll out AIP. The company conducted nearly 600 pilots with the technology in 2023, a significant increase from fewer than 100 in 2022. Looking ahead, Palantir provided optimistic guidance for its first quarter, expecting revenue between $612 million and $616 million. Additionally, the company anticipates full-year revenue to range between $2.65 billion and $2.67 billion, aligning closely with Wall Street's estimates. Notably, Palantir's U.S. commercial revenue experienced substantial growth, climbing 70% year over year, with a 55% increase in commercial customer count. But before we move on, we just want to thank you for watching this far. You see, experts see a lot of potential in Palantir. Once known mainly for government contracts, it's now rapidly evolving into a major player in software services since going public in 2020. The introduction of its artificial intelligence platform has been pivotal in expanding its reach into the private sector. While the tech world was busy with startups like OpenAI last year, Palantir was quietly making strides in AI. Through innovative seminars called boot camps, it engaged prospective clients, resulting in over 100 new customers in the past year alone. What's exciting is not just the acquisition of these clients, but also the opportunity for upselling and cross-selling within these new accounts. Financially, Palantir's growth is impressive. It achieved profitability for the fourth consecutive quarter in 2023, meeting the criteria for inclusion in the S&P 500. However, despite these achievements, reaching a $1 trillion valuation by 2030 seems overly ambitious. Even the most bullish analysts, like Dan Ives, predict substantial growth, but a $1 trillion valuation would require an extraordinary leap in value. While Palantir's growth prospects remain promising, such a high valuation may be unrealistic. Nevertheless, Palantir's potential as a key player in the AI space cannot be ignored. With a strategy focused on long-term growth, investors may find value in holding Palantir stock and riding out its journey in the tech landscape. So, let me just recap Palantir's growth journey and where it stands in the market. Over the years, Palantir has transitioned from primarily serving government contracts to becoming a significant player in the software services sector. One of its key advancements has been the introduction of the artificial intelligence platform, which has helped it penetrate the private sector and expand its customer base. Despite some fluctuations, Ark Investment Management has consistently shown support for Palantir. This is evident in their continued investment in the company, even during periods of uncertainty or market downturns. Their confidence in Palantir's long-term potential speaks volumes about the company's trajectory and market position. Now, the big question is, do you think Palantir's growth will continue to impress, or do you see any challenges ahead for the company? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about Palantir's recent Q4 earnings result, just click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.